SpaceX is about to launch what could be the absolute biggest IPO in Wall Street history. Elon Musk is targeting a mind-boggling $1.7 trillion valuation, pitching a massive global space and satellite infrastructure monopoly, and most people are realizing they won't get a single share at the $135 offer price. So what do you do if you miss the allocation but still want to ride the rocket? You find the back door. There are a handful of specialized exchange-traded funds that quietly hoarded private SpaceX shares long before this IPO madness started. But warning, not all SpaceX ETFs are created equal. Some hold massive concentrations, while others are a total dilution trap. Today, we are breaking down the top 3 vehicles you can buy right now on a standard brokerage account to play the SpaceX boom, including a literal legal loophole a billionaire used to pack an ETF with private rocket stock. Let's kick things off with the most fascinating new fund on Wall Street, the Barron First Principles ETF, ticker RONB. This fund is actively managed by legendary billionaire investor Ron Barron. If you know anything about Barron Capital, you know they were ultra-early backers of Tesla, XAI, and SpaceX. In fact, Ron Barron turned a $1.7 billion early investment in SpaceX into more than $15 billion today. But here's where the story gets crazy. Normally, the SEC places a strict 15% cap on illiquid or private assets inside a standard everyday ETF to protect retail investors. But Ron Barron completely bypassed this limit. How? By legally classifying his SpaceX shares as less liquid instead of illiquid. Because of this brilliant regulatory maneuver, RONB launched with an unprecedented, heavy-hitting private SpaceX weighting that has fluctuated between 11% and 22% of the entire ETF. By buying RONB, you are standing shoulder to shoulder with a billionaire who has direct access to SpaceX management. Just keep in mind that because it's actively managed, it carries a 1.00% expense ratio. But if you want a massive SpaceX allocation right out of the gate, RONB is the undisputed king of the ETF space. Now, if you want an alternative ETF structure that also goes incredibly heavy on late-stage private tech giants, your next best stop is the ERShares Private Public Crossover ETF, ticker XOVR. XOVR uses a unique crossover strategy. It actively mixes highly liquid, large-cap public equities with selective, late-stage private companies using institutional special-purpose vehicles. And guess who sits right at the top of that private sleeve? SpaceX. According to recent fund disclosures, SpaceX commands a powerful 14.4% weighting inside XOVR. That is a serious punch for a standard ETF brand. The benefit here is balance. XOVR gives you a diverse mix of public tech leaders alongside its heavy private space allocation. It offers a very clean, structured way to ride SpaceX's private valuation numbers as the IPO pricing solidifies. However, keep this in your trading notes. XOVR can carry slightly wider bid-ask spreads than your average Vanguard index fund because of the unique nature of its private holdings. If you are trading XOVR, always use limit orders rather than market orders to protect your entry price and avoid getting slipped by a bad execution. What if you want a fund that focuses entirely on the broader space race, but still uses SpaceX as a core foundational pillar? That brings us to the Tema Space Innovators ETF, ticker NASA. This fund crossing over $2.6 billion in assets under management after soaring 50% since its launch with top space stocks. Inside the NASA ETF, the SpaceX exposure sits right around 6.5%. While that weight is lower than RONB or XOVR, the rest of the fund is packed with pure-play, publicly traded space stocks that stand to benefit massively as SpaceX expands its launch capacity and Starlink internet infrastructure. For instance, Rocket Lab is actually its largest holding at over 10%. Think of the NASA ETF as a thematic macro bet. If you believe the commercial space economy is ready to explode and you want a diversified basket anchored by SpaceX, this is the most liquid and structurally sound ETF on the list. Before you log into your brokerage account to buy any of these, I need to share a vital warning that 99% of retail traders completely miss. It is what I call the Inflow Dilution Trap. SpaceX is a private asset inside these funds. The actual number of private SpaceX shares these ETFs own is fixed. So, what happens when millions of retail investors panic buy these ETFs to chase the IPO hype? Let's look at the mechanics. Just recently, a staggering $7.9 billion in net inflows flooded into the top space ETFs. But because fund managers cannot easily jump on an exchange and buy more private SpaceX shares to keep up with that massive rush of cash, they are forced to use that new retail money to buy the public stocks in the portfolio instead. To wrap it all up, if you want the maximum, highest concentration bet on SpaceX, backed by a billionaire who circumvented the SEC caps, look at RONB. If you want a highly concentrated traditional crossover ETF vehicle with a 14.4% weight, check out XOVR. And if you want a diversified, highly liquid play on the entire commercial space sector, NASA is your best bet. The SpaceX listing is going to change the financial landscape forever, but smart investors play the structure, not just the hype. Which of these three options are you adding to your watch list? Drop your ticker choice in the comments below. If you found this breakdown valuable, slam that like button, subscribe to the channel,